Welcome back. You're watching Buy Now, Sell Now on ET Now, and it's time for our viewer queries. Just a note for all of our viewers, we are live on all our social media platforms. You can post on your queries on Twitter, YouTube, or Facebook, as well as on WhatsApp. You can also message your queries on the WhatsApp as well. So let's get going with the first query, and this one is coming in from Harsh. And he's saying that he's a long-term investor, but he's stuck in HDFC Life, which he's purchased at 600 rupees per share. He's saying he can hold on for 3 more years. What is the support which breaks that when he should actually look to sell all of them rather? So he's asking for a support level, Kunal, for HDFC Life. He's actually stuck in this particular counter. He's purchased it at 600 rupees per share. He can hold on for three more years. So what sort of levels should he keep in mind while staying invested in this one?
I'll suggest to stay invested. First of all, given the time frame of the 3 years plus which you already have. Now, in terms of support which you're looking out for, there has been a major support for HDFC Life. On the monthly charts, which rises closer to 450 levels. For the stock price. Now it's 10% down from current levels. It's possible that the stock for the next few months can continue to drag a bit more. But I believe that at current levels of 500, 450, those are very attractive levels from a longer term play. So my suggestion would be to hold. In case you're looking out for big support points, then 450 on monthly closing could be a good support zone for HDFC Life.
Okay, Kunal, we've got a question coming from Jitendra, and he's asking about the view on the bank Nifty. He's got a 3500 strike call for the monthly expiry, and he's asking what level he should look at, what his strategy should be.
35,000 call, I'm assuming. So, Alex, I think at 35,000 call, again, very difficult to anticipate what has been your buy price at the 35,000 call option. But I'm assuming that if it's slightly, at the money or at the current price where where the index is trading, I would suggest to hold on to, the option for at least a day more, because my sense is that the last 4 or 5 days, we've gone through more of a mean retracement where the index has come back towards support, Nifty at 17,000, Bank Nifty back at 35,000 levels. So there could be a case where if the Bank Nifty holds on to this 35,000 mark on closing basis, there could be a recovery in a day or two. Other factors like crude has also come back towards 113, 114 mark. India VIX has also managed to taper off at those levels. So I believe that there is a higher probability that the index can get into a bounce, which is why I would suggest to wait for at least a day.
Ravichandran Iyer, and he's saying that he has 50 shares of MGL, that's Mahanagar Gas, which he's purchased at 950 rupees per share. He's saying that he has a time frame of 3 years only. What should he do now? What's your take on this one, Ashish? What should he do with his holding in MGL? 950 is the buy price.
My suggestion would be to exit from MGL at this price point. Again, 2-3 reasons. First of all, FIs are holding decent stake in this company, and as they are liquidating their lot of stocks, so this is continuously under hammer from almost 1,200 rupees. So, and with whatever the market rally we have seen, this is laggard only. So Mahanagar Gas, because there's a pure distribution company, and the way gas prices are going up, I think the major beneficiaries are going to be those companies which are doing drilling of the gas, not marketing companies. So instead of this, I'll suggest that you swap this stock with GNFC, where you can get whatever the loss you have incurred on MGL, you're able to recover. First of all, this again a stock where we are going to see very decent set of numbers. Last year they did a profit of 680 odd crores. I am expecting this year they'll do almost 1600 odd crores, and just 12,000 crore market cap company. So you should sell MGL and swap it with GNFC.
Okay. Kunal, another view is sought on the benchmark this time. This is on Nifty. And Vamsi wants to know 17,500 call strike bought at levels of 465 for the current expiry. What should Vamsi do?
17,500 call, you said, right?
That's right.
Well, I think it's deep, out of the money, and looking at the structure and the expiry lined up the next 3 trading sessions, I don't sense that you could probably expect such a big recovery on the Nifty. We are trading into a range. So my sense is that if best, you need to roll it over to the next expiry. Maybe a 17,500 for the April series could actually be a better series. Now, if it's for the current series, I think we've already lost a lot of money on this option because of the time value erosion the stock has already seen. So I would suggest that if you can roll it over to next expiry, then there is a higher chance that the Nifty and Bank Nifty they both can start to get into a breakout mode for themselves.
From Sumit, and this one is for you, Kunal. He's holding Britannia at 3,500 rupees per share. He's saying, should I book a loss or wait? What are the crucial levels that he should look out for Britannia? He's saying that if you say, then he can hold on for the next 2 to 3 years as well.
Well, I'll suggest to exit, Britannia. Now I understand that FMCG, and majority of the stocks they are extremely oversold. But then for Britannia specifically, the chart patterns are have changed dramatically. The stock has broken some multi-year supports for itself. The indicators have given, breakdown signals on the monthly as well as on the quarterly charts. So purely on that aspect, I would expect that even if you get a minor rally, those could be good opportunities where you can look to exit the stock. So I would suggest to exit, wait out for maybe some bit of rally, maybe a 5% kind of an modest rally from current zone as a good level where you can look to exit out and shift towards some other sectors, maybe something like Reliance, ITC, something which I've been advocating since quite some time. I think that's some interesting bet which you can look out for in even the private sector banks.
Okay, all right. So that's the view on that question. We've got another coming in from Kolkata. Abhishek is writing in asking about Welspun India, which he's already purchased. Ashish at levels of 135. He's got a long-term horizon on this stock, and he's wondering whether to add more at the current level.
No, in my view, you should not add on current levels. This stock, we have seen even a lot of liquidation. This particular counter from 170 to 90 odd rupees with a low of almost 76 rupees. Because again, what we are seeing, that traction which was earlier expected in textile stocks really is not building up, and this is again proving a laggard sector because right now rally is there in. Mostly in metal, oil and gas, and IT related stocks. So my suggestion will be to exit from this stock and again to focus again on metal. And here my top two picks are SAIL and Nalco at this price point. And in my view, both have good future prospects because this quarter numbers are going to be really very good. So you can hold for this quarterly numbers as well as for next 6 months. At least you will recover your losses by investing in either of these two.
This one is coming from Indu, and this one is for you, Ashish. She's saying which specialty chemical stock with a niche product is good to invest in for the next few years. What's your take?
So two stocks I can suggest. In my view, Anupam Rasayan and Lakshmi Organics. Both these stocks hold a lot of merit. Both are having a very significant market share in the chemicals which they operate. And post this correction, it has given very good opportunity to accumulate these stocks. So yeah, you can pick either of this.
Okay, gentlemen, just a small request to keep your answers a little short. We've got 5 minutes left on the primary question taking round. The next one's from Kunal Thakkar. Ashish, this one's for you. Alok Industries and or future retail is the question. So it's a bit of a dicey question. Long-term view is being sought, and I don't think he's bought it yet. 2 to 3 years is what he's looking at.
No, I'll not advise to buy, in fact, both of them. In my view, again, Alok, though one of the largest integrated player, but still we have to see good results coming out from them. So Alok is avoidable. Again, as I said, the textile sector is not doing well, so better to avoid. Instead of this, you can look at liquor stocks like Som Distilleries, which is around 63, 64, got good future prospects, as well as a stock like GSFC, which can also give you very good returns in the next 1 year.
For you, Kunal, this one is from Venkat Bobby. He's saying that he has Interglobe Aviation, or Indigo as we all know it. He has about 20 shares purchased at 2,200 rupees per share. What should he do?
I think you should look to average, let the cost come closer to 1950, 1980. So the stock is trading at 1900 plus levels. I would believe that if there is a minor correction, look to use the correction for InterGlobe Aviation. It's been a stock which has done reasonably well over a longer term kind of time scale for itself. So would suggest an average, but wait out for maybe slightly lower levels rather than current market price.
Okay, we've got a question coming in on ICICI Securities. This one's from Rahul. He's seeking a technical view. I don't think he's acquired this yet, Kunal, and I do not know the time horizon. What would you suggest on this one?
So I think it looks attractive. I think the entire space, of brokerage, it looks very attractive to me on the charts. ICICI Securities has seen some good volume pickup last week. Now, even though the stock in the last 2-3 days has gone through a mild correction, but then looking at the volumes, the price setup, I believe it's just a matter of maybe few trading sessions where you could probably see the stock getting to a recovery phase. So purely from a risk reward play, I think it's an attractive buy.
Neeta Rai is saying that is asking whether she can buy Tata Power and IEX at current levels, and how's the medium term looking for both of these counters. What's your take on this one, Ashish?
So Tata Power has really actually trapped a lot of retail investors, and we have seen that in spite of market going up, this stock is not going anywhere. So I suggest instead of Tata Power, you look at Adani Power, which is quite underpriced compared to, in my view, other peer set players like JSW Energy, etc. And the kind of projects they are executing, we are going to see very good numbers going forward here. IEX is a stock that you can remain invested because in this particular quarter, as the power demand is going to shoot up, same volume will also shoot up in IEX. So IEX is a hold.
Okay, I'm going to combine a couple of questions. This first one's from Prasant. This one's for you, Kunal. It's more like a strategy question. So he's invested or he's put money into stocks like SAIL, IDBI Bank, AMI Organics, RCTC, and he points out that he bought all of these at close to the 52-week highs. He's incurring a loss of about 26,000 rupees. He's wondering whether to book losses and move to quality. And Nelson, on the other hand, is asking whether he can buy things like HDFC Bank or even HUL at the current juncture.
Club the answers as well, Alex. So first on the shifting part, I believe it makes sense to shift towards something like HDFC Bank, ICICI Bank at current zone. They could be very attractive bets, either from a medium to longer term kind of a play for themselves. HUL, I still have my own doubts because of the recent spate of correction. Let the stock settle down below that 1900 levels. I think that would be a better zone rather than buying the stock at current juncture. Coming to the first part of the query, in terms of shifting prices which you already have for stocks like SAIL, IRCTC, etc. Those are good stocks which you bought at, even though you bought at a wrong timing in terms of higher levels. I would suggest that if there is any possibility where you have additional capital and want to probably average some of the names like maybe in IRCTC, SAIL, I think that could be much better strategy rather than exiting at these stocks at current juncture and shifting towards stocks which are on high beta or large cap names.
Let's kickstart with our rapid fire then, and this one is coming in from Harish. He's written to us from Bangalore. He's saying he has Radico Khaitan 100 shares purchased at 1,000 rupees per share. He wants to know when will the stock rebound, or should he look to average at current market price? What's your take, Kunal?
I'll suggest to wait out for averaging. 825 could be a better level.
Okay, the next question is on 3M India. Sunny is asking about this one. Kunal, on the charts, does it still look attractive? He's wondering whether to add to what he already has.
I would suggest to wait out, let the stock break above the 20,000 mark. That could be 20,500 to be precise. That could be a better level where you can look to average.
Okay, this one is from Jitendra. He's asking, is it good time to enter and buy ICICI Bank? He's planning to hold on for the next 3 to 5 years. Ashish?
Yeah, surely you can buy and hold. It's a good buy at this price.
Ashish, Yes Bank, Naresh bought a while back, 2 years ago when they were locked. He's asking after the locking period is over, can he sell? What should he do?
Yeah, I think better you sell and exit from Yes Bank.
Alright, this one's from Mohammed Vamik. He's saying Mega Soft 500 shares that he's purchased at 84 rupees per share. Wants a short-term target. Can he average it? What's your take on this one? Kunal, do you track Mega Soft?
I would suggest to avoid and not to average because for small rallies in the stock has good exit points.
Okay, Subramaniam from Chennai wants to know about Gujarat State Petronet, which he's holding at he's holding 500 shares of. I don't know the buy price. Ashish, should he continue to hold for the long term?
Of this, I'll suggest you buy a GMDC, which can give you better return compared to Gujarat State Petronet stock.
Nanda wants to know, can he buy Adani Ports at current market price for the longer term? What's your take, Ashish?
I'll suggest you go for Adani Wilmar Limited, which can give you better return compared to Adani Port.
Kunal, last one, Kajaria Ceramic for 1 year. Would you buy?
At current levels, Kajaria Ceramics look attractive. 900 could be another point where you can look to average further.
Alright, and with that, we come to the end of the rapid fire. I saw Alex actually cheat and he actually took one more query even though time was up. But nevertheless, thank you so much, Kunal, as well as Ashish for joining us on the show and giving us your take on that big mega blockbuster multiplex deal, as well as resolving our viewer queries. And for our viewers, we will be back tomorrow and we will be taking your queries. So do write into us and tune in at 11 a.m. But for now, we will slip into a break on this edition of Buy Now Sell Now. Stay tuned.